Hi, I'm Gwen Preston of Resource Maven with a few comments today on a company called Darnley Bay. So Darnley Bay is a new company, just picked up an asset at the end of last year called the Pine Point project in the Northwest Territories. I got excited about it because Pine Point is a zinc asset. It's zinc and lead, but mostly zinc. This is a project that was mined. It was in operation for 20 years in the 60s and 70s and into the early 80s under Cominco, and they produced from 46 different open pits in that area. So obviously it worked before as a zinc mine. They took the best deposits that they knew about, but there's still a lot more deposits in this belt that Cominco didn't take for various reasons to do with where their mill was located and what the metal prices were doing at the time. So Darnley Bay has now come in and has taken a look at the other 40 odd deposits that are left on that project and has decided that they're economic, and it just released today an updated preliminary economic assessment on this project. Now, this is a first for Darnley. Of course, they only got the project 3 months ago. A previous operator had put out another PEA, but it was a complicated engineering setup. They were trying to do it in my estimation, an overly complicated way. Darnley said, no, we need to do it simple. We're only going to do open pits. We're going to keep this as easy as possible. And the study that they generated produces a 34% after-tax internal rate of return. That's usually the first metric that I look at when you're looking at, especially an initial economic study, how much money is this thing actually going to make? 34% for an after-tax IRR is very good, especially because I think this is just the beginning for Darnley Bay. They put out this PEA within a few months of buying the project. That means, by definition, that they haven't really put any of their own information into the study. They haven't had time to generate any of their own information. So this summer they're going to go up there and generate a bunch of that information. So the real areas of improvement that I see, first of all, metallurgy. The engineers who did the study had to use fairly conservative recovery estimates because Darnley hasn't done updated metallurgical work. You'd think they could use stuff from the historic mine, but that's not allowed under the regulations. So they have to do some metallurgical work, and that will increase recoveries by probably 10%, maybe more, from sort of the low 80% to the low to mid 90%. That'll have a significant impact on the economics. Then there's the deposits themselves. The study looked at 10 deposits, but they were just the 10 that the previous operator had focused on and for which there was the most data. There's another 35 deposits that deserve more attention, and there are exploration targets that nobody has touched yet. Cominco didn't touch them because they were perhaps too far from where their mill was located, or there's another set that were actually underneath the town that Cominco ended up building to house its workers, so they couldn't go after those. So there's some really interesting exploration targets. There's a bunch of historic deposits that have seen some work but that deserve a lot more work, so I think both in terms of how big the resource is and how good, in terms of grade the resource is, there's a lot of upside right there. And there's also a lot of capital cost optimization ahead. When you're doing a study quickly, you end up having to use a lot of assumptions for how much things are going to cost. As you progress and know more about the asset, you have time to do the studies that really nail down how much it's going to cost to build this or develop that. And from the numbers that I'm seeing, those capital costs are likely to come down quite a bit. So I just pointed out because zinc is certainly a sector that people are really interested in. There's a lot more zinc companies right now than there were this time last year. But I think quality zinc companies that actually stand a chance of filling the production gap that we're facing right now, that's still a small list, and Darnley Bay is up there because they actually have an asset that is reasonably near-term production, that is showing strong economics already, and yet I can see still has a lot of room to grow.